Hello, everyone. This is Stock Market Daily. Thank you for joining me today. It is May 2nd, 2023. As always, this is not financial advice. Please don't copy the trading strategies you see here because you will lose money. This is only for educational purposes. Okay, so we're looking at the flex grid on Thinkorswim, and I'd like to focus on this advanced decline line for the S&P 500. The ticker symbol is ADSPD. So that's ADSPD. And if you've been following along, I've recently changed this from ADD, which was the NYSE stocks, to this indicator, and this one is the S&P 500 stocks. So one thing right off the bat that I see in the morning, right as the market opens, is that instead of the green candles, which we've had for the past couple of days, where we've opened and we just see green candle, green candle, green candle, and it just keeps going higher. And we're seeing the SPX tick up higher as well. Today it was red candles. So that was the first thing, that the first time I saw a week open like that on this indicator. And I decided to hold off a little bit and wait until I place some of my trades, which helped, but it did not actually, I still got caught up in this downtrend here. So let's look at the SPX, and you can see we also sold off here, and we actually have quite a little bit line here, or a little bit different than this right here. So it looked like we found our footing here, and that's what I was looking at, and I entered my trades right here-ish because it looked like the strong selling pressure had kind of stopped, and we've found some footing and we found some support. And actually here you could see it go up and almost pretty much to the level where we opened, but not quite. If we look at the SPX, that never really transpired here, interestingly enough. So the SPX kind of just chilled out for a little bit from all the selling pressure in the morning, but it definitely did not have this wick up higher to at least this prior level of support and resistance. So to be honest, guys, I don't even know what caused this entire sell-off. I placed my trades in the morning and I left. So that's another kind of a good thing about this strategy is I don't have to sit here and I don't have to monitor the trade the entire day. I left and I did not have internet access for a little bit, and nor was I interested in checking on it. I did at some point get internet access, and I was surprised we're at below 4,100. So from my phone, I decided to place a put or sell a put right over here, or I think it was like somewhere over here. Hard to say actually, but it never got filled. It was a little bit too high of a strike price. I basically just kind of was gonna set it blind. So if we were taking a leg down, then I would have been caught in it. But unfortunately, never got filled. I tried to set it for 450. It was like at 410, and next time I checked, we were somewhere over here now. But I do believe that this sell-off was actually due to the fact that there's still issues with banks. Now the government's talking about running out of money and all that stuff that's starting to emerge. We have been running up for the past couple of 4 days or so. So it was time for a little bit of correction, but this was definitely a doozy. We ended up 1.16% down on the day. So if you were listening yesterday, I did mention that, if you've been following along, I did have my calls I had 5 calls that are trapped since last week that I sold, and I've been rolling them over next day and to next day and to next day ever since. So on Monday, what I ended up doing is I took 3 of those calls and I rolled them to Wednesday, which is May 3rd. You see them here. And those particular options were only, we were so high. We were at the 4160, 4165 level at that time, and the put options were at 4100 area. I'm sorry, the call options were at 4100 area, so it was hard to roll. So the only thing I could have done is roll them from the first to the third, and I collected a little bit of premium, but I also rolled only 5 points. Okay. So, and I did that with 3 of them. And I specifically said yesterday that, we were due for a little bit of a pullback or a pause. I mean, doesn't mean that's going to happen. However, I'd rather take my chances and not roll the other 2 contracts from Monday into Wednesday and leave them for today, for Tuesday. So I did do that. They were at 4,100. So they were here today. 4,100. They actually went out of the money at some point during the day. And obviously they went back in the money, unfortunately, or fortunately. And I ended up rolling them. The 4,100s were rolled to 4,115. I could have rolled higher. I could have gotten out of the 4,120, but I believe it was something like $40 or $50 of premium that I would have collected. Now, instead, I rolled it to 4115, which is right here, and I collected $340 of premium on this roll. And there's 2 options. So I felt as though I should collect the premium, and whatever happens tomorrow with the market, nobody knows. Regardless, I have time. I will have the ability to roll out of it. Now, the put options. In the morning when we were selling off, I was watching it and it kind of slowed down. I did enter into the 4135, which is right here. And for that one, I collected only $120. And I actually had to roll it into the 4115 strike for tomorrow. So there it is right there. And that roll on that roll I collected $120 additional dollars. Okay. So again, not terrible. We are right at where we closed. So even if we pull up 1% tomorrow, or if we drop down 1% tomorrow, I only have 2 puts, so I could deploy 4 as part of my regular trading strategy, or from my account size. I could deploy 4, and exactly why I didn't enter more than 2 today. I mean, I tried to get into 1 later portion of the day, but it was like 40-80 or something, and I figured we were already down so much. I didn't think we we're going to be able to sustain being down for that long during the day, especially how much strength we had for the past couple of days. Okay, so the other option, so that was the 4135. The next one was the 4125, and for that one I collected $140 worth of premium in the morning, and that one I ended up rolling to 4085, and it's right here. And for that roll, again, I could have rolled it down even further down, but I wanted to collect more premium. And for that roll from 4125 to 4080, I collect $320. So a lot of premium on that, and that's a big, from 4125 to 4085. So we definitely have some we definitely have more premium built into the options tomorrow, which is great to see. And again, I mean, I did this at the very end of the day, 15 minutes before market close, and I was traveling, so I only had my laptop. So basically I traded for probably a total of 30 minutes today, 15 minutes in the morning and 15 minutes before market close. And I don't want to sound like, hey, this is that easy, but again, this strategy that I do, and it works for me. I'm not saying it works for everybody. You don't have to be glued to your computer. You don't have to be glued to your trading desk. You don't have to be setting these, stops, which could be triggered at any time on crazy volatile, drops or pops. So I had a pretty easy trading day today, I would say, and collected $1,545. Now, again, this is not ideal. I don't want to keep any positions overnight, and I have seven. I have five here, and I have two here. And no matter what happens tomorrow, I will be in the money on something, unless we actually end right here, how we are here today. If we end at 41.15, or maybe even like at 41.10, that would be ideal for me, but I'm not going to bet on it, simply because then all of these, well, no, actually, I'm wrong. I would be in the money no matter what happens. I would be in the money on any of these, anything. If we go up, if we go down, doesn't matter. Just kidding. So, like I said, it's not ideal, but again, there's really nothing to fear. I know there's a lot of guys that try to, set up condors and broken wing butterflies and things, and um, if you if that works for you, great. However, I just found that too stressful, and I don't believe that you always have to be fearful of holding positions. You can hold positions as long as you are okay with potentially, giving up time for to get out of a trade, and your account could support a really strong pullback or a really high rip in the market. Then I don't see this being an issue really. Um, Again, there is opportunity cost, because if you have to, let's say, give up a week or two or whatever, and really roll yourself out of a position that is really deep in the money, then yes, I mean that's not ideal. But hopefully that doesn't happen again. So I hope you're following along and seeing how I'm doing this, and you could, I'm not telling you to do this by any means. In fact, my intro says not to do it. However, there's other ways. You don't have to do the SPX. There's the XSP, which I do in a smaller account, which it's just it's that easy. It's not that very difficult, and it doesn't consume as much of your buying power. Okay, so these are the options for tomorrow, and obviously, as you probably already know, we have Powell tomorrow, so it's going to be very volatile. Let's take a look at the credit spread. The credit spread did fantastic today. We lost a lot of premium out of this option here, and there's two of them. And I was thinking either to buy this back due to the fact that tomorrow we have this big event, or leave it as is until maybe right before the conference. But then I decided that even if, no matter at this point, at this point where we are today at 41.19, even if tomorrow we end up just ripping higher, I think eventually that it's going to be very hard to reach 4,300 for the market. I mean, even if we did, again, you can roll out of this position, but giving up 500 and whatever it was earlier today, it was much less. Obviously, it was like 400, and this option was about 400. But still, giving it up right now, I feel as though I'd be leaving money on the table. So we collected, actually, well, the P&L on this already is 1,302, and I think I really want to stretch it and take this past the conference, past the Apple earnings, and see what happens here. Um, if I mean, obviously, this could come back to life. This option could come back to life, back to the about a $1,200, $1,300 range. If we start coming up, it won't be very difficult for it to do so. But I think with all the banking situations, the government shutdown looming, um, I think that in sell in May and go away, saying that everybody's talking about, I think it might be a little difficult for the market to reach these highs. So I'm gonna chance it. I'm gonna leave it, even though I entered this option with um, pretty much expectation to sell it before Powell, and whatever premium I collected at that point, whether it be 200 to 300, then I was going to be happy with that. But seeing the reaction today and how much we sold off tells me that there's still the bill. This option is still good the way it is, and I'm just gonna keep it. Now tomorrow that might all change, so I might have a change of heart tomorrow. But for now, I'm gonna keep it. I'm gonna keep it as is. I'm gonna try, extract more premium and collect more premium from this option. Um, well, not collect. Well, I've already collected the premium. I should say, wait for the theta decay to basically remove some of the cost out of this option. So that's it. I appreciate you guys watching, and tomorrow should be an exciting day. Tune in tomorrow. Thanks. Bye bye.